Dear professional friends, welcome to 10th episode of GST Weekly Updates. We are excited to see your overwhelming response to our last episode, so thanks for the same. There is no new notification, circular or clarification issued by the department between the last episode and this episode, but one guidance for CGST field formations was issued on 30th March 2024. Now the guideline overview. The guideline provide for CGST field formation to maintain ease of doing business during investigation with the regular taxpayers. Investigations must be approved by principal commissioner, and in certain cases the written approval of zonal principal chief commissioners is needed, and this need to be the prior written approval. If multiple departments are investigating the same taxpayer, they should consider consolidating the investigation to avoid the duplication. When engaging with the regular taxpayer, official letters should be used before summons, and digital informations available on the GST portal should not be redundantly requested. Keep watching till end. Before and we will take up all queries, questions received by us during this period. Let's begin with critical case laws that are important for you, your client and your businesses. Let's explore a critical 2023 decision by Kerala High Court in case of SK Eldos versus State Tax Officer, focusing on the adequacy of service of order through GST portal and its implications for filing appeals, reported in 2024 NTN volume 84 page 514. SK Eldos challenged the service of an assessment order which was served via GST portal, questioning whether this method constitutes significant legal service for starting the limitation period for filing appeal under section 107 of the CGST Act. The important legal issue was whether notification of an order on the GST portal satisfy the legal requirement for serving of the order, thus triggering the commencement of the limitation period for filing appeal. The court confirmed that service through GST portal is a valid form of service as prescribed under the GST law. It emphasized that the limitation period for filing an appeal starts from the date of such serving, aligning with the statutory framework provided under GST law. The Kerala High Court held that the appellant, having been notified through GST portal, could not claim ignorance of the order. Therefore, the statutory period for filing an appeal was binding on and had triggered correctly. This judgment underscored the recognition of digital platform like GST portal as legitimate channel for legal notification, enforcing the shift toward the digital governance and importance of adhering to statutory timelines in the legal proceedings. The court's decision in this case established a precedent for the significance of digital service of order under GST law, highlighting the modernization of legal process in tax administration. Next is a very important case, a landmark decision of 2024 by Delhi High Court in Jagdish Bansal versus Union of India, where the court examined the power of GST authorities to seize cash during inspection, reported in 2024 NTN volume 84 page number 500. The case centered around Jagdish Bansal, whose cash was seized during the GST inspection. The court had to decide if GST Act and the provisions allow for the seizure of cash as a part of the inspection process. The critical legal question was whether cash falls under the category of goods as per section 67 of the CGST Act if it could be legally seized during the GST inspection. The Delhi High Court referred it as to its earlier judgment in case of KM Food Infrastructure Pvt Limited versus Director General DGGI, where it was established that cash is not considered goods but money as defined in section 2 subsection 75 of CGST Act. The court held that cash being categorized as money and not as goods cannot be seized during the CGST's inspection, leading to the conclusion that the seizure of Bansal's cash was not justified. Implications: this judgment significantly impact GST enforcement practices, clarifying that while goods can be seized if liable for confiscation, cash cannot be seized under the same provisions, thus protecting the right of individuals and businesses. Delhi High Court's decision in Jagdish Bansal versus Union of India set a precedent in reinforcing the legal distinction between cash and the goods under GST framework and limit the scope of seizure during inspection. And this is very important case which can be practically useful for all of us. Now let's discuss 2024 Allahabad High Court decision in Gopi Chand Batra Traders versus State of UP. An important case concerning the application of penalties under section 129 of CGST Act, reported in 2024 NTN volume 84 page number 508. Gopi Chand Batra Traders faced penalties after the goods were seized in their Godown. The question before the court was to determine whether penalties under section 129 of the CGST Act apply to goods not in transit but stored in a Godown. The key legal question was whether the seizure of goods in Godown as opposed to the goods in transit could trigger penalty provisions under section 129 of the CGST Act, which primarily deals with the detention and seizure of the goods in transit. The court's analysis was the Allahabad High Court reference to a previous judgment, Mahavir Polyplast Pvt Limited versus State of UP, which held that penalties under section 129 cannot be applied to goods found in a Godown since the section pertained to goods in movement. The court ruled that the penalties under section 129 was applicable for goods seized in the Godown, leading to the questioning of this order against Gopi Chand Batra traders. The decision clarifies the scope of section 129, limiting its applicability to the transportation of goods, thereby affecting how businesses and authorities interpret the seizure and penalty provision under GST law. The Allahabad High Court's judgment in Gopi Chand Batra Traders versus State of UP significantly impact the enforcement of CGST penalties, ensuring they are applied correctly in lines with the legislative intent. Next, now discuss a decision by Tamil Nadu Appellate Authorities for Advance Ruling, and this ruling was in 2023 in case of VBC Associate, focusing on the eligibility of input tax credit for solar panels, reported in 2024 NTN volume 84 page number 57 in Tamil Nadu AAAR. VBC Associate sought clarity on whether they could claim ITC for the pronouncement and for the procurement and installation of solar power panels, a crucial question given the increasing adoptions of renewable energy sources. The core issue in this case was whether the ITC on solar power panel used for generating electricity, an exempt supply, is blocked under section 17 subsection 5 of CGST or Tamil Nadu GST Act. Specifically, when considering the constructions of plant and machinery, the Appellate Advance Ruling Authority affirmed the Authority for Advance Ruling AAR decision that ITC for goods and services used in installation of solar power panel is not admissible, citing section 17 subsection 2 and rule 43 subrule A of the CGST and Tamil Nadu GST rules. The appellate authority held that ITC is not available for the solar panel used in installation of solar power plant, as the electricity generated is exempt from GST, aligning with the specific prohibition in the Act and rules. Implications: this decision impact business investing in renewable energy infrastructure, clarifying that ITC cannot be claimed for the cost associated with the installation of solar panels that are used for generating exempt supplies. The Tamil Nadu AAAR's ruling in the VBC Associates case set a significant precedent on the admissibility of ITC for solar power installations, solar power panel installations, emphasizing the emphasizing the importance of interpretation of GST law. Now let's discuss 2023 Allahabad High Court ruling in Bajrang Trading Company versus Commissioner Commercial Tax, a case examining the validity of initiating GST proceedings after business registration was surrendered, reported in 2024 NTN volume 84 page number 518. Bajrang Trading Company surrendered its ITC registration but faced proceeding based on survey conducted at other firms. The key issue was whether the proceedings were valid given the company's deregistration. The court needed to determine if GST proceedings could be initiated against a firm that has surrendered its registration, especially when the investigations stemmed from the activities during the period of active registrations. The High Court noted that the tax period under scrutiny was when the Bajrang Trading was still registered. The court found that proceedings were justified due to relevance of the period in question and alleged misuse of e-waybill by the company. The court upheld the initiation of proceeding, stating that the surrender of registration does not exempt Bajrang Trading from compliance or accountability for its action during the active registration period. The ruling underscored that GST obligations and potential liability extends beyond the active registration period, specifically if the activities under question occurred while the entities was active and registered. The Allahabad High Court decision in this case reinforced the principle that deregistration does not shield entities from being accountable for their past GST compliance during the registration period. Thanks for watching. Don't forget to like, subscribe and hit the notification bell so you never miss out our latest videos. Please share your valuable feedback and ideas to improve to make it more useful for viewers in the comment box. So keep agile till next week and stay connected for more exciting videos. Thank you.